Welcome to Momentum Monday. Today is October 13, 2024. Howard, have you bought any new stocks lately, or you're just enjoying the riding the bull market with what you have?
I am mostly enjoying dabbling in a couple of catch-up ideas I showed. Square, SQ. It's just I don't even like it, but it's kind of been a laggard to PayPal. Um, and I feel as much as I don't trust Jack, I think there's going to be some, like he knows he's got to do some cost cutting.
Maybe if crypto perks
Just
up, this will catch up. Yeah.
yeah, just a trade. What else? No, I'm enjoying. I'm just trying to stay out of the way of this run. Very, very strong. You got international working. You got gold commodities working. You got. I mean, there obviously is a fear of inflation, no matter which president they pick, right? They both have inflationary policies. At least in the short term, right now, just trying to get elected. Um, and I think the big news is, the obviously the Middle East is, is there enough oil out there, and can you prevent oil from shooting up if tensions just continue to increase? So that's what I'm watching.
Mhm.
The Chinese are hoarding commodities, right? Andy Kessler wrote a great piece about China being the new Japan. It's just got so much real estate that's not performing, and dead money. And we'll see how the stimulus, if the stimulus really happens. The internet stocks, it makes sense to me that they would run the most because they have the most leverage um, to the spending and the stigma. I imagine real estate is the reason they're doing it. So keep an eye on that. But supposedly they're hoarding gold and oil and commodities. So that could lead to all kinds of other problems, if the world needs those. You're gonna have to buy them back. And so in line with that, Goldman Sachs all-time high, because whoever's Goldman will be in the middle of all these transactions. They've got Meta farting around in fintech and all the other stuff. They're just, I think I've been talking about that here since about 400. And even with rates coming down, and that'll affect their profits on lending. They're not fully reliant on being a bank.
So they have
Um,
earnings in a couple days. I think that's Tuesday.
yeah.
And the new earnings season just began on Friday with a few banks, JPM and Wells Fargo beat estimates. Both of them broke out, and with them, the whole financial sector is basically at close at new all-time highs on
Go
Friday.
give people the monthly, show people the monthly.
Yeah, it's all-time highs.
Yeah. So yeah, it's hard to listen. The banks will screw this up as they always do. Um, I was just driving by a Bank of America that just how many pieces of real estate have they signed leases on that they do not need all these banks, right? So there's still it just goes into that repurposing of America. It's just the money's going to have to be spent. Um, no, you do need to go into the bank. I need to go and move to close an account. You got to move in and show them blood samples and stuff. But other than that, why do they need all this real estate? Just Wells Fargo
But that's
breaking.
probably one of their best investments, Howard, the real estate.
If they own it, like I haven't looked at the balance sheets,
If
but
they
yeah,
own it, yeah.
assuming they own it. But I guess Citigroup's been the laggard because Wells Fargo is a criminal organization and they're
Yes.
all
Okay.
time. All right, so you've got a lot of strength. Even the European banks are strong. So within that time frame, like the only people that are upside down is like as I've been saying, it's a shitstorm for bears, right? You have transportation's hit all-time highs. Uber broke out.
Yeah. Uber broke out. Everybody was a bit worried, I guess, of what Tesla is going to bring out during their We Are Robot event. And it seems like whatever they have is not coming on market anytime soon. So I guess the Uber holders were relieved. That's why we saw that huge breakout and
Yeah,
basically
it's
new
interesting because
all-time
the
high.
real play on Tesla is robots. So the stock was down. So it's like it's some, I own Tesla through indexes, but it seems like the stock was down on this news, but I can't imagine.
Yeah,
And I think it's down because taxis are so important to Tesla, I guess. But if you think about everything else he's invested in, I don't think he gives much of a other than AI and the data. His bigger company is going to be SpaceX and Starlink and obviously his AI products. So Tesla's, a very complicated business that is I wouldn't say struggling, but overvalued. And robots, while they'll help Tesla, help his other businesses that it'll create. So, I mean, if you're going to own Tesla, you kind of got to own all his companies and have a Elon ETF. Like, I don't understand why people would just want to own Tesla when his incentives, those incentives are to make the stock go higher. That's a tougher company to make go higher because it's just a lot of moving parts to that company. And the government, he's already bled the government of what he needs to get that company off the ground. So I don't know. That's an interesting story because it's just constantly, the number one top stock discussed and argued about on StockTwits. And it just feels like people are missing the forest for the trees because there's so many companies trending, like actually hitting all-time highs, like even Wells Fargo that we saw, and no one is talking. So it's really interesting that like he's pushed the attention towards this company and for good reason, but it's just too much attention, and people are missing the bull market. But let me share my screen for 1 second. I want to give people some context on how I'm thinking about stuff.
all right, go ahead.
Can you see it?
Not yet. You're
How
not
about
sharing it.
how about now? Can you
Okay.
see it?
Yeah, now we're seeing concentration of the S&P 500. Yeah.
Yeah. So here's this. I usually share my ID when I open my screen.
Yeah.
Can you see? Can you see this chart?
Yeah, we're seeing it's a table. Yeah.
Yeah. So top 10, I don't know. The top 10 stocks, even in the S&P, are 35%. I mean, so much of America's
Yeah.
net worth is tied up in 10 companies. I mean, listen, I'd rather be tied up in these than energy stocks, right? I'd rather be tied up in the companies that have high margins, which is these tech companies, than low margin companies, right? And financials are still well represented in Berkshire Hathaway, right?
Let me ask you something. So
Yeah.
for the next 5 years, would you rather own the top 10 companies or the bottom 494?
What I was going to talk to you about, and we can talk about, is closet indexing. I think there's too many venture funds and not enough hedge funds, right? Like I think in a world where, and I can't believe I'm saying that because I'm like, again, running hedge funds, but in a world where uh, you could start up a hedge fund to charge 1 in 8 or 1 in 10 or a preferred rate as a small business and closet index. There's so many ways to closet index right now for people for tax efficient reasons or options reasons where if I was gonna start a fund, and like, honestly, it just seems crazy if you've got trust not to do it, including yourself, Ivan, now in 2024, is if you've built up this trust, you closet index and apply, a strategy a couple times a year when VIX hits certain levels. But when the world is tied up with these 10 stocks, and it's not like Nifty 50. And a lot of these companies have 5 products that would be in the Fortune 100. And Apple probably has 5 company products that would be in the Fortune 100 companies. Google has YouTube. Netflix isn't even on this. So I think it's very hard to not index. And then the other chart I was going to share is the bottom 434 stocks make up 34. 35%. So I guess the question is, there's all kinds of ways to run algos. Do you drop those four, is it worth dropping those 434 stocks or to try and pick three of those stocks that may make it to the next hump, right? There's so many ways that you can now slice and dice the S&P and be a closet indexer. That's fascinating to me. And I've been saying this for years, and now we're upon us, right? When the markets become this, not fragmented, but like reliant on a few companies. So I think we're getting closer to an era of stock picking where people will want stock picking, not just indexes, as money kind of moves out of these or into these top 10 stocks. So anyways, I'll take the screen share off. How do I just wanted to kind of get that out there. It's just something, and that's from Hostile Charts, who's great.
Or do you have anything else to show or no?
No, let me take it off screen share.
Okay, I took care of. And let me go back to those charts. So let's go back. The S&P 500 basically made a new all-time high last week. What also happened that is now we're starting to see a little bit more participation. The mid caps, S&P is large caps, MBY is mid caps. Mid caps just broke out to new all-time highs for a multi-month base. They spent basically the past 6 months in a range, and now they're breaking out. Small caps is starting to wake up. They outperform on a daily basis finally on Friday.
Yeah.
And the reason for that is that we finally saw yields pulling back, because ever since the last FOMC meeting a few weeks ago, when the Fed decided to cut rates, we actually saw yields rallying since then. And on Friday, for the first time, we saw interest rates stalling. And if this is the beginning of another leg lower, maybe we'll finally see small caps outperforming. But for that to happen, we need to see rates pulling back. It's not going to happen if they don't pull back. It's just not sustainable. So just pay attention to rates, and if rates continue lower, I think probably people need some more exposure to some more speculative areas of the market, like small caps, like biotech, like solar, like crypto, those more interest rate sensitive sector. If rates pull back, if they don't pull back, those are not the areas that you want to be in. So this is something that I'm paying very close attention to regarding market rotations. I think interest rates are the major driving factor behind the rotations, and this is why I'm keeping a close eyes on them. And the other super strong sector last week was cybersecurity. The ETF CYBR. I mean, it obviously has been rallying for a while, but last week had a big breakout. And anything really in that sector, anything from FTNT to PANW, Palo Alto Networks, to Checkpoint, anything really that is in cybersecurity is outperforming right now for whatever reason.
Yeah, that looks interesting. So that's been. Let me see the weekly on that.
Yeah, weekly is a bit
messy, but yeah, that could
underperforming.
Fortinet looked great.
Yeah, Fortnite, I mean, they crashed earnings, then went sideways. Look at this tight range consolidation, and now they're following through. And
what's the weekly look like?
So really anything in this is weekly. Really anything in cybersecurity, and I'm showing a few other names: OSPN, Checkpoint, CyberArk, just breaking out.
Yeah.
GE.
I mean, we know what's happening, right? Like Iran.
Yeah.
Just people thinking about next moves, right? Israel has a free shot on goal. I hate saying it like that, obviously, I'm pro-Israel. And so every day they wait, right? They have a free shot on goal. And if they just decide to use cyber as their attack, they have the upper hand right now, because Iran, from a media perspective, launched a couple hundred rockets. And if Israel hasn't, there was rumors that Israel already hacked a lot of cyber there over the last couple of weeks. And so it kind of goes to say if and when these, and I think they will be settled sooner than later, these particular wars going on. I think there's just going to be a lot of need for cyber, right? We've seen what drones have done, and the defense sec. So the other one is drones, right?
Yeah.
Because they're causing so much confusion on the battlefield, and in just have
Other than AV,
well,
we know.
I think you got to own the defense industry, like
Yeah.
this is a small cap stock in many ways. AVAV, I own it, but it's just wild, and there's so much short selling in this stock too, because it's a really small cap.
Yeah.
So I think you just got to own a basket of these. But I think you have to own a basket of cyber, which is software, and you got to own a basket of defense stocks that skew towards modern warfare, which is drones and software. And Palantir obviously has been the poster child for both meme stock and defense and America First, right? Like perfect storytelling at the right time. Um, you know, and everybody, that's kind of like the modern version of GameStop, real business, mystical in many ways in terms of like what the product is. And the CEO is a great storyteller, very, America first, pro America, and that's a good story to be telling right now.
We'll
Especially
probably see some
young.
resistance here.
Yeah, I mean, I don't know, it's all-time highs, and it's just this is creating a lot of wealth in a brand new area of Silicon Valley, right? The Joe Lonsdales and whatever. There's, Peter Thiel obviously too, but this is creating they were $100 billion now, Palantir. Yeah,
Um, where is it? Yeah, $100 billion. Yeah.
yeah,
Yeah.
but,
Yeah.
and so they got a lot of performance to catch up to that multiple, and a lot of insider selling. Obviously, you got to be nuts not to be insider selling. So it's just it's the perfect stock for that we're in right now. And so that one is one that's it's the modern it's a better version of Tesla right now because it's just they're telling a clean story, right? Like if you
Mhm.
believe in America, this is an important company, right? And Elon's kind of lost the script with Tesla. So from a meme stock perspective, this one kind of controls the market. So it's like you said, Ivan, it's cyber. If you run on tech, it seems like you own the big 10 companies and you speculate and you want to own tech, you speculate some in cyber and you overweight defense, right? And then you can closet index and still be aggressively long and get rid of 430, and you don't want to own the banks or you don't want to own commodities, you can closet index by, with a little more aggressive bent. So that's what I think is going to be really interesting is can you outperform the indexes by 20, 30% for the next 10 years by picking 5 or 6 stocks, right? And I think there's going to be a lot of people that build their brand in the financial world, not by the VC picks that they make, but by like differentiating themselves from the markets when so much can be tied into just copycatting the index and a little bit of difference. So that's interesting. I think I don't have much else to say. What about you? Anything that you're looking at particularly?
I mean, I've been pretty heavily long Nvidia and Nvidia derivatives. And
Yeah.
on Friday, I took some profit on strength. And on Friday, I rotated some of the money in. I bought some small caps just in case there is a rotation.
I
And
like that.
also, I bought some Redfin, obviously, just in case interest rates decide to pull back. And if they do, we might see a bounce
Yeah.
in housing related names because my thinking is that eventually, if we see lower mortgage rates, more listings are going to come up, um, will become active, and probably home builders are going to suffer, but listing companies like Redfin and Zillow probably going to benefit. And but we'll see. It's just a trade. I have a stop, and if it gets hit, I'm out for a small loss. I don't mind, losing small.
Yeah.
Um, so it's just
You,
a
you there's so
Yes.
many ways to closet index right now, and just like I think there's going to be some products. You know, we've taken a couple shots on goal and have been wrong with our venture fund around this whole idea of deselecting companies, and you know there are more ETFs than there are stocks, so it's not going to be easy. But and ETFs have tax efficiencies with them. But there's something fantastic. You know, I have my degenerate economy index, which is crushing, you know, the markets. And there's something to me that's super interesting about closet indexing with the small, you know, tilt, as one could say, that has my interest. Again, that's all assuming the markets continue to go up, right? Which they don't. So, but
I mean,
with
everything is cyclical. So there will be years when the S&P is going to drop 20%.
oh yeah, yeah, it
It's
has to now.
inevitable.
Yeah, I mean, but the S&P is structured right now in a way that these companies are somewhat indestructible. The government's going full tilt on Google right now, and you know, it's hardly made it budge. I mean, in dollar and market cap it has, but it's not in any bear market or anything. And they're full tilt against, you know, Google. And the government can't take on all these companies, right? You know, and so it's going to take some other act, and it could just be rates. It could just be too many people leaning into this market, Ivan, and rates could surprise, right? Just because they worry about policy from both these presidents. Like some of the policy that I hear is just so bad, and that's from both. So that's just as a guy who's going to survive either president, right? Like,
It's probably mostly pre-election rhetoric, and most of those things, 90% of those things are never going to
understood,
happen. So yeah.
understood, but tariffs weren't just rhetoric,
Well,
right?
they're inflationary.
Yeah.
Obviously, any government deficit, which
Yeah, I'm not
was,
talking about witch hunts and
it's
who
also inflationary. So
just
yeah,
scores settle, but war, rhetoric, and commodities.
also inflationary. So yeah,
Yeah,
all of
just
those. Yeah.
inflationary stuff. And if you look at the companies that are really going to benefit, you know, I think Goldman, which we talked about, I think you've got to consider that China is hedging by hoarding commodities. So I think, you know, that's super interesting. And then you have, you know, what's going to happen with cyber in Iran, right? Like, you know, both sides are going to have to deal with Iran. But whoever wins president is going to have to deal with Iran. All right, buddy.
All
We'll
right,
see
Howard.
you at Oktoberfest next week if you're coming. We look forward to hosting you here on Coronado. It's good to be home, 70 degrees. It's been great weather, huh?
Yeah.
Great weather. All right, buddy.